almost forgot. Most important is there's a lot of uncertainty, right? On one hand, soft landing narrative is very appealing, right? And bulls have been in control for the past 8 months. On the other hand, there's more and more evidence that potentially this bull rally has run its course. So how do you manage the uncertainty? My answer is you have to have a solid trading plan, right? The idea of process versus outcome, right? We all look for making money, right? Growing our assets, and but you cannot do that at the expense of the process, right? So if you break the process, or if you don't have the process, if you don't have a trading plan, it's just a matter of time, especially in the traders market, right? In the past 2 years, we didn't go anywhere. So in this kind of market conditions, if you don't have a repeatable, simple plan that you can execute, you can give it to anybody, right? And have them execute, right? Then that's an issue. So what is my proposal for repeatable, simple process that you can follow? Cash, right? I mean, if you're in soft landing, 30% in cash. If you're in hard landing, 50% cash. But I believe everybody should try to have a large cash position, much higher than it was 2 years ago, right? When market was when we were trading the bull market, okay, maybe you had 20% cash, maybe you had 10% cash. This slide hasn't changed. I always said 30%. I do say now we're in a bear market, so it should be higher, 50%. Second one, portfolio drawdown, right? In all of the pages, right? If you go through all of our models and everywhere, if you expand these notes, I trade up to 10 positions because I have different services. I've been trading for 25 years. Okay, I have 10 positions, but I recommend that on average, you should not have more than 4 active positions at a time, with maximum loss of 2.5% of account value per position, right? That is the golden rule. If you traded 25 years, okay, maybe you have 10 positions. If if you're managing $500,000, okay, maybe you have 10 positions. But on average, 4 positions, no more than 2.5%. That means you're not risking your portfolio drawdown will not be more than 10%. Whether the market is going to go up by 15% now, or whether it's going to sell off by 15%, you are locked into maximum loss of 10%. And I propose not to have all 4 bearish or all 4 bullish positions. Right now, I'm bearish. So if you're bearish, you have 3 bearish positions, maybe 1 long position, right? If you're in a soft landing, okay, fine, you can have 3 bullish positions and 1 bearish. But then you're ensuring that whether the next leg is up 10% or next leg is down 10%, you're limited to 5%, 7% drawdown. So these drawdowns, this maximum exposure, risk management, that's what define a very repeatable process, right? So it's very important to have number of positions and positions size, right? And having this repeatable process that you can execute is very important, right? So that's I encourage you to journal. Very important to journal. Very important to grade yourself. It's very important to be self-aware, right? Emotional intelligence is extremely important, and kind of be honest with yourself, right? When you keep a journal, document, have a checklist of what before you put on the trade, have check marks, right? Cash, number of position size, maybe bid and ask spread, maybe number of the volume of trading on exchanges. Maybe you want to avoid meme stocks. There are few rules that we all have, and they vary a little bit, right? Some people only trade meme stocks. Some people never touch meme stocks. Some people trade forex. Some people don't. So you have your list. But for the most part, everybody agrees on cash, position size, liquidity, right? You want liquid markets. You don't want to be stuck in a position, right? So you want to avoid penny stocks. You want to avoid stocks that don't have a lot of volume, easily manipulated. And some of the other rules we cover, during live trading room, right? Don't try to call the top, right? But look for top building process, right? So right now we are clearly building top, right? Wait 2 to 3 days to confirm trend change, right? It's better be a little bit late to the party than early, right? You never want to be early to the party, right? The host gets upset, what to do, how to entertain you. Same thing in trading. You do not want to jump on a trade too early, right? You want to wait for some kind of confirmation. Very often people reference 2 to 3 days. I believe in that rule, right? If you see a breakout of any trends or breakout support resistance, you know, if you're doing day trading, you want 2 to 3 candlesticks, whatever the time frame you trade in, days, weeks, hours, but you want 2 to 3 candlesticks to confirm that the trend is accelerating and changing, right? Very important rule. ABC pattern, volume, and some of the other.